Hi, Andrew Smith from Newton Fallowell, and this is my property predictions for 2017, particularly for the West Bridgford and surrounding areas. Now, I've got this information from several sources. One is the Centre for Economic and Business Research. Others are some of the big players nationally in the property market, the likes of Countrywide, Savills, Knight Frank, etc. So I've looked around the marketplace and compiled some information for you, and this is how I interpret it. Now, unusually for my videos, I will be casting my glance down a few times because I have notes, because this will be slightly longer than normal, just to forewarn you. So where do we start? Well, we start with Brexit. There's a shock. Brexit's had a big impact so far on the marketplace and our expectations. Now, for the whole of 2016, you would argue that maybe it hasn't, but 2016 was split roughly pre-April and post-April. That's largely how I saw the market. Next year, we're going to have 3 months of relative uncertainty as the powers that be, the politicians who are supposedly elected to run countries, argue and bicker with each other like children, in my experience at the minute. I find it astonishing what they're doing. But once all the sabre rattling and bluster has died down and Article 50 has been triggered, and we can start to look forward at the reality of it all, I think things will start to stabilise and feel better. But until then, the first 3 months of the year might be a little bit slower than we would normally expect. And we don't normally expect to see things flying till the end of January anyway. That's when the spring season in property actually starts. Now, there are some people forecasting substantial economic downturns. I don't think a substantial one will happen by any means. It'll certainly not be anything like 2007-2008, where the property market went into severe decline because it halved in its transaction levels almost overnight, which was interesting. All this is tempered by the interest rate. The interest rate I don't expect to go up until about 2019. And if that remains constant as it is at this minute in time, it will of course dampen any negativity on the housing market, because mortgages, etc., are still available and still relatively cheap. When I looked at Savills have done some research and made a prediction that I'm going to use straight from what they've said, and that is on transaction levels. Now, transaction levels, by that what I mean is completed sales in the marketplace. It's the number one indicator for the property market. It's always very difficult to look forwards, of course, but by gauging the extent at which it's increasing or decreasing over the previous 6 months, you can usually have a reasonable expectation of where to find the property market over the next 2 or 3. And at this minute in time, Savills are suggesting that in 2016 there were approximately 1.25 million transactions in the property market. They're expecting in 2017 that to go down to 1.12 million. Now, that doesn't sound like a huge drop when you're looking right over the country. But if you split the country down to its 6 typical regions and you start looking at that on a monthly basis, it's still 1,800 completions less per month per region over the next year. That's quite a lot. And of course, when we have less completions happening, that is usually because demand has dropped a little bit because of uncertainty in this instance, and that will have a negative impact on house prices. However, that is buoyed slightly by the fact that we don't have enough housing stock. The housing stock in the UK is year on year about £100,000 lower than it needs to. 100,000 properties lower than it needs to be. We're falling short of our building commitments on a national basis. And this will have a bolstering effect because, of course, it readdresses the problem with supply and demand by reducing supply. Now, that would put us, I think, in a position where prices will remain static rather than go down over the next year or so. You'll probably find that into 2018 as well, prices remain relatively static. But again, I expect towards the end of 2018 prices to start to increase again reasonably healthily. And that's when I expect to see the 2019 interest rate increase. But that's a couple of years away yet. We can wait to see what actually happens with that. So when you're looking at actual price expectations in our particular area, we really are suggesting that they should remain relatively stable. There are going to be some anomalies. There are always some roads that go down a little and some roads that buck the trend and go up. But I think by and large it will remain relatively stable. And every month you'll be able to see how that's going, because you know I produce monthly figures that show what the price increase or decrease has been month on month per area. One thing to warn you about in 2017 is media. Our friends in the media, they do like a good story. Don't necessarily have to be too concerned with it being truthful, but it certainly has to be a good story. And there's nothing better than misery when you want to get the crowds in to watch what you're doing. And they're going to have a real opportunity in the first 3 months of this year. In 2016, pre-April, we had a lot of transactions in the property market simply because the market was trying to get in before the stamp duty rise that happened in April. So January, February and March were very, very buoyant. Now, taking into account we've got a natural decrease in those levels this year, or the expectation is for that, compared to a spike last year, what they're going to be telling you is that the property market is in crisis because the figures year on year are so low. That's my expectation anyway for our friends in the media. But when you do see that, please take it with a pinch of salt, because all they're actually saying is we've got a slight drop this year compared to a normal year. We had a big hike last year compared to a normal year, so there's a gap. No surprise there, that's exactly what you should expect to see. It will be interesting to see what happens after Article 50 has been triggered, because after April last year, this year, 2016, it's the 30th of December today, after the April change in stamp duty, we saw a slump in the summer, so transactions were somewhat down over the summer months, and that didn't really recover through the back end of the year. It remained relatively low. So if Article 50 gets triggered and we know what's happening, and we can actually breathe a little bit of a sigh of relief, because things aren't as bad as some people have been saying, and we can actually move forward positively, you may well see actually a resurgence in the property market after the summer months, or late spring, early summer months. Now that in itself could drive things forward a little bit, and I expect to see the year actually broken into two sections, and exactly the opposite way that 2016 was. So a relatively low first 3 or 4 months and a slightly more buoyant latter half of the year. But please have a look at the media coverage, and again, a pinch of salt time, because they are very good at shouting about misery. What all this means for you, by the way, depends on what you're trying to do. If you are moving up, my suggestion would be the first 3 or 4 months are your friend. Do things relatively quickly if you're moving forward, because if all prices are relatively static, that means that you're selling yours at a lower price and buying it at a higher price, which is stable. If things do move forward a little bit, it will be in the latter half of the year, I expect. So doing things now will ensure you against a possible price rise towards the end of the year. So you'll get more bang for your buck, basically. That's the idea. So if you're looking at moving up, I'd suggest moving relatively soon. If you're downsizing, take your time. Have a careful look around. See where you want to be. Don't be afraid of the thing that people are terrorised by, which is going into rented. That's not necessarily a bad thing, because it gives you the flexibility to jump on a property and bid for it and snag it quickly, where ordinarily if you have to sell to buy, you may be at a disadvantage because other people have got cash and are moving forward. So don't be afraid to look at the short-term rental option. It's not the price or the capital sink that people necessarily think it is, but ask advice. That's the best way to look at that. But have a careful look around, find the property that you really do want, because I expect stock levels to be relatively low for this time of year, or the first 3 months of 2017. So a little bit of time taken will probably serve you very, very well. And when you price your property for sale, do it sensibly, do it realistically, because if you don't and it hangs around the market for too long, you may get caught up actually in the problems that the first 3 or 4 months may bring us, which is people being a little bit reticent to part with the cash, and therefore you could end up selling it for a lot less than you would have done if you'd have actually put it on at a sensible price in the first place. If you're investing, do your homework. That's the big rule of thumb. Have a very good look at what you're buying, where it is, what the price is, what state it's in, what the costs are going to be moving forwards, and particularly once you've decided as to what's important to you, of course, whether it's yield or capital growth, make absolutely sure that you're in a position to take advantage of the marketplace in the best way for you. So have a look at the changes in tax, have a look at the changes in the rental rules that are coming, because the fees are changing or are set to change. Ask your agents, both the sales agents and the letting agents, what to expect, how it affects you. Speak to your accountant, do your homework, make sure you're on solid ground before you start. In summary, you'll be delighted to know we've come very close to the end. In overall summary, therefore, with the property market, I expect prices to remain relatively stable in 2017. I expect a lot of doom and gloom reporting in the first few months as the media make hay while the sun shines, and there's a notable difference between 2016-2017 statistics as they start to unfold. Whatever you're doing, do your homework, look at it quite carefully and make sure you know what you're doing and you're doing it in the right way. And I think most importantly of all of this, if you're not going to do a lot of research like I've done, then certainly speak to your agent, ask their advice. You don't have to sell or buy through them, but speak to 2 or 3 and get an understanding of the marketplace, what the housing is doing and how everything is operating before you actually jump forward and start to progress. Your preparation is very important this year, more so I think than most others, given the nature of the marketplace as we expect in 2017. And other than that, thank you very much for taking the time to listen to me. Have a fantastic new year, and look forward to seeing you all again in 2017. Thank you very much. Bye-bye.